Japanese stocks have been rallying due to the weaker yen. Joining me to talk about how long this will last is Shuhei Abe from the Hennessy Funds. Welcome, Shu.
Thank you.
Okay, tell me your view of what's going on with regard to Japanese stocks. They moved up quite a bit because of the government's real interest in devaluing the currency. How long is this going to last?
Well, what is happening is very, very important. Japanese government very decisively shifted gears from long-term deflationary trend changing to inflationary, which they said up to 2% in 2 years. And for that to be achieved, they said they'll do whatever it takes. And commitment that they've shown is convincing the market. And at the same time, before these measures were introduced, Japanese corporate earnings, as well as exchange rate excessiveness, was enough to react in a very aggressive way. Somewhat expected, but this they introduced in a very correct, right manner, the catalyst for that.
Clearly this helps Japanese exporters. Which companies does it help the most? The Toyotas and Sonys?
Clearly Toyota. Toyota registered its historical peak earnings in 2008. At that time, yen was 120. Today, yen, let's say, hovers in between 95 to 100. I strongly believe that this fiscal year just begins from this April, more than very high probability assigned, I personally assign, that Toyota will renew its historical peak earnings, even if yen is not as cheap as it was before.
Do you think the yen can weaken all the way back to 120? And if it does, will that spark a trade war or a currency war with the United States? Because the United States government has already warned Japan about what's going on.
Well, I doubt it. First of all, yen is not that weak. If you think about the range of the yen hovers during the year 2000 until 2008, it's been always 100 to 120 level. And it was only past 12 months to 18 months that the yen get excessive, because central bank did not do much while the rest of the world is inflating their balance sheet.
So even after this run-up of the past few months, when the yen has moved from 76 per dollar to 100 per dollar, you still think there's more to go for Japanese stocks?
Oh, absolutely, absolutely. This is just start of it.
And the big risk is?
Big risk is probably 2 to 3 years down the road. When this objective is achieved, we may have a more than expected inflation. Whether we can control it or not is all up to the productivity overall, or can catch up with the amount of money that they pump in the system.
Well, that's a problem for another day. Thanks a lot.
Thank you very much.
Abe-san, and thank you for watching The Street.